I think, though, the Fed is going to be a little more nuanced in the sense that I think it's going to talk about the disappointment in growth we've had and emphasize that it looks temporary. But I think where the Fed is going to be strongest is in terms of its concerns rising about low inflation and its increased concern.
But you think they're going to say there's a timeout?
I don't think they're going to say it explicitly. The guidance right now that's in the statement is very non-committal. I don't think they're going to change it. But I think in the language they're going to use, they're going to basically tell you March is likely to not happen and that the bar is pretty high to get them to do anything here.
I want to get to the bottom line on this. Did the Fed make a mistake?
We'll see. I think the issue is what's happening now. The risks have gone up a lot. Obviously, the fourth quarter, which is going to get the first print this week, is going to come in close to zero. If the economy is still resilient here, and if it's growing at 2.5% pace this year, I think the idea that the Fed has begun a tightening cycle makes sense. But right now we have so much uncertainty and we have increased risk that certainly it makes sense for the Fed to stop and take time. And if it is the case the economy is a lot weaker, we'll feel the Fed made a mistake.
Larry makes a big deal this morning of the idea that that growth is really permanently lower than it had been, and that essentially the Fed should not have been in the business of hiking. And especially given what's happening in recent market turmoil, and that Fisher, he makes a big deal of this. Fisher Grant said the market is wrong. And the market said, no, we're not wrong. We're right here. Is the Fed out over its skis a little too far?
I don't think so. I mean, look, the Fed moved policy rates up once. When you saw the decision to raise rates, they were extremely dovish in terms of the forward guidance, notwithstanding the dots. I think the Fed recognizes the risks. I think we have a situation where growth is permanently lower, but part of that is because the supply side of the U.S. economy is so weak. So we're seeing significant labor market tightening. We're at a really important juncture right now. If the U.S. economy is faltering and is getting close to something like a recession, the Fed will have made a mistake. There's no doubt about it. But the jury is really still out about where we're going to be in 3 or 6 months. And if the economy shows resilience, if it tracks a 2.5% growth rate, the Fed is going to likely have to come back here and continue to tighten.